In this video, we're going to be discussing a new form of divergence that we're looking at programming. Let's talk first of all about the existing form of divergence and how that works so that you can see the contrast. Now, as the spoos are moving higher here, our strategy is keeping track of the highs of the bar. It is also keeping track of the volume. So as the spoos move up and the volume moves up, we record the high of the spoos and the high of the volume. If the spoos move higher but the volume drops, and we have other specific conditions that we're looking for, we'll get a short trade. Again, spoos move higher, we're recording the volume. If the spoos move higher still, but the volume begins to drop off, and other conditions are true, we'll get a short trade. Very simple way to look at volume. And the converse is true for a long trade. We'll just pick this as an example. Spoos are moving down. We're recording the lows of the spoos, but recording the volume as well. Now, if the volume begins to increase and the spoos are dropping and other conditions are true, we'll get a long trade. Now, let's contrast that to a slightly different type of divergence. And it seems like the crux of the matter of trying to define this condition is based upon a crossover. In the rectangular boxes here, we've identified several instances where the volume bars are crossing over the zero line. Here, as well as here, as well as here. It also occurs here, and it also occurs here. Now, we didn't identify this particular instance because there were other conditions that weren't quite met. So, here's what we're looking at. We're going to call this, for lack of a better word, a cycle. So if the volume cycles above the zero line, as it does, we're going to record the high of the spoos as the volume moves up. We're going to continue to record the volume anytime the spoos hit a new high. So we would have recorded this high on the volume. As the spoos move higher, but the volume dropped off, we're still going to record exactly the same volume that occurred at the time of the high of the spoos. So we're going to record the volume here. Spoos move higher, we're going to record the volume here. Spoos move higher again, we're going to record the volume there. And we're going to record the volume there as well. Every time the spoos move higher or an equal high, we'll record the last volume bar that occurred. Now the volume drops off, but it does not drop below the zero line. Instead, turns around, moves up even higher. So we apply the same principle. If the spoos move higher, we're going to verify what the volume was. And then finally, we record the volume here as well. Spoos start to move down. Now, unlike the situation right in here, in this case, the volume drops below the zero line and then turns and comes back up above the zero line and crosses over. So our first crossover occurs here. The second crossover occurs here. What we're now going to do, since we've recorded this high, if the Spoos move higher on the next crossover, but the volume is lower at the time we get a new high on the Spoos, that will constitute a divergence. And if other conditions are true, we'll get a short trade. But we have to move higher on the Spoos and lower on the volume in this cycle compared to the previous cycle. So a cycle could be defined as an instance where the volume bars are crossing above the zero line. They have to cross it, that is. So in other words, it has to have previously been below the zero line, and then it moves above the zero line. So there's a crossover here, there's no crossover here, and there's a crossover here. So we're going to compare this cycle to the previous cycle. Now, the Spoos move higher. We record the highs. All right? On this cycle, we had a short condition right here. Now, we also have a short condition right here as well, because these volume bars are less than they were here. So as the Spoos move up, we continue to record the highs and compare it not to the current cycle, but to the previous cycle. Now once again, the Spoos move down and we have another crossover. In this instance, now we're going to record the highs of the Spoos and the high of the volume in this cycle compared to the previous cycle. Crossover number 2, we might say. Crossover 3 is now being compared to crossover 2. In this instance, we notice that the Spoos are higher, the Spoos are higher, and the volume is higher, so we do not have a divergence. Now, in the next situation, we do have a crossover, but the Spoos do not move higher. So in this case, we're not going to record any information about the high of the Spoos, nor are we going to record any information about the volume, because we're not at a higher high on the Spoos. We have to be a higher high on the Spoos in order for us to record the volume. So the first time that occurs is way over here. Now once again, we're recording the high of the Spoos and the high of the volume. This compared to this, as you can see, this compared to this, we have no divergence. We're higher. But notice what happens a few ticks later. Again, we're going to continue to record the volume as the Spoos move higher. But in this case, on the next time the Spoos hit a high, the volume is considerably less. So in this case, what we're really going to do is compare this volume to this volume. And now we definitely have a divergence. So in that case, we'd have a short right there. Not here, as it shows up, but we would have a short here. Now, ultimately, that doesn't get us very far, but it gets us further than it would have on this bar. All right, so here, Spoos have moved higher. We've now recorded the volume here, and the volume right there is negative. Now the Spoos move higher. There is no divergence. it moves higher still. And we're now going to record these highs. Now ultimately, we get to this point here, the Spoos have hit a high. And if we went higher, we would record the new highs on the Spoos along with the volume. But that, as yet, has not occurred. So this is now a saved high on the Spoos, saved volume at the same bar. Market has begun to short. Now let's do just the opposite to see if we've got some kind of divergence. The Spoos are moving down. We have a crossover here. They're moving below the zero line. As we do, we get to this point here where we have a new low on the Spoos. Actually, it's right there. Right there. 1250. Okay? And let's just measure this out. 1337 here. Pardon me. 1337.50 here. 1337.50 there, as well as on the next bar. So each time that occurs, we're looking at where the volume was at the time. So while we first started recording here, we're going to wind up recording over here because that's the last time the Spoos hit that low. So now we're recording this volume. We have a cycle here. We have a crossover. On the next bar, we have another crossover. It's brief, but it is a crossover. But the Spoos don't move lower, so we take no action. On the next crossover, we watch, and ultimately the Spoos do move lower. But as you can see in this instance, as they move lower, our volume bars are much, much lower. So ultimately, we're looking at the low here on that bar, and we take no action. Now, the Spoos have moved up, and there's another crossover. It's hard to see, but there's a bar that has gone above the zero line, and it's now come back down. As it does, the Spoos have hit a new low, and there's our divergence. So we wouldn't get a signal here, there would be no signal here, but there could be a signal here if other conditions prevailed. So now once again, we have this crossover, we're recording the lows. Spoos do not go, the volume does not cross above the zero line, so we're still tracking the low of the Spoos and the lows of the volume, and you can see there's where our next low is. Spoos move lower, and we do have a divergence here compared to here. So there could be, if all other conditions are true, a long signal right in here. So that's the kind of approach that we're looking at. When we use that approach in conjunction with other conditions, we should eliminate much of the divergence that we were previously looking at and improve our results. We're not quite sure what we're going to call that form of divergence, but in any case, it's a different form of divergence, and it looks like it's got some real merits. This is Rod Kusin and Spooman for Risk, so you can look forward to some adjustments in our strategy code as we work on how to code up this particular condition.